All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. Glad to be with you this morning. It is Monday, October 9th. Happy Columbus Day. The bond market is closed today, but the stock market is open. Bond derivatives, meaning ZN, which is the bond futures contract. Excuse me, it's TN, not ZN. TN, that is open. And also TLT, the bond fund, the 20-year bond fund. So I wanted to make sure I got that. I did a video last night recapping the week. We also talked about the week coming up in terms of Forex Factory, what's to come in terms of economic data. We got CPI, PPI. We also have the University of Michigan Consumer Sentiment number. All that stuff we talk about. So if you haven't already, make sure to take a look at that weekly recap. We talk about a ton of stuff. We hope that you check that out. Good morning. This morning, unfortunately, was a late one for me, watching the Cowboys get blown out of the water. San Francisco is just too damn good. Tough sports weekend, man. My Texas Longhorns lost to Oklahoma, and the Dallas Cowboys lost. It was just one to forget, that's for sure. Now let's get to work. Dow futures down 164 points, NASDAQ down 97, the S&P down 0.54%, and the Russell down 0.90% this morning. And the reason I try to lighten it up with some football talk really quickly is because I'm sure if you are following the stock market, you're probably reading a lot of geopolitical news that is very disheartening and very sad to read. The Gaza Strip war, I guess. I don't know what the name is currently. There's a lot of headlines, obviously, in terms of Israeli mobilization of troops, Iran helping the Hamas group defend Palestine. I mean, there's so many ways and so many angles to read commentary from, but you're not here to read about political stuff. We want to talk about how this affects the stock market. So in terms of sensitivity, I want to be upfront. The last thing I want to do is try to make profit from bad things that happen. That's not what I want to do. You know, money's not everything in that sense. I don't want to sell my soul for money, but we do have a job to do, and that is to go over the information with you guys. It's a terrible situation what's happening in the Middle East. All we can do is hope and pray that there's a peaceful resolution out of it. And sometimes, you know, when you have people suffering, the last thing you want to think about is money. But again, I just want to say that, preface that ahead of time, so I don't want to come off as insensitive to what's happening overseas, because that is important. With that being said, the dollar is up. So again, we have a little bit of a risk-off sentiment right now. This usually happens in geopolitical situations. This is not the first, and this is definitely not going to be the last. So there's a table I want to show you guys talking about after what happens to the market post of these kind of massive geopolitical war type headlines that happen in the stock market in the world. Volatility index up 8%, as pretty much expected when you have, you know, fighting in the Middle East, especially at this level. 10-year, the crude oil is up this morning 3.82%. Again, pretty much as expected. We're going to chart that together. That's right around 86. Gasoline futures $2.24, up 2.48%. We know that anything in the Middle East that can maybe harm any kind of oil production or oil transportation, you know, Iran has the strait there where they can move crude oil. So again, more issues there, causes a little bit jumpy prices in terms of crude oil and gasoline. But at the end of the day, it's still supply and demand. We haven't heard any news or any kind of word from OPEC or the Saudis in regards to this situation in terms of oil production. But again, any kind of headlines will let you know. Going to be a tough one to take a look at crude, especially when you have these kind of events. So let's take a look at crude oil rather quickly. If you remember, we had this line here. This was the 85, 86 level. That's kind of your resistance that we had back in August. If you guys remember, I missed out on that crude oil short because we had that OPEC headline hit, and then that's where we got to 95. And this was the same top that we had last October and last November. This looks like that might be the triple top, or that may be the resistance here. The issue here is that if you wanted to go long on crude oil, you do have a gap to fill now. And that's what's difficult about these gap ups and gap downs. These gaps usually fill. Does it happen immediately? Not all the time. But again, you want to see if that gap fills and then see where we go. Crude oil is not along here. If anything, I'm looking to the short side personally, just for that gap fill. The question is, we'll see if many more headlines come in that will affect crude oil either negatively or positively. So again, very volatile. You got to be very careful if you're trading crude oil. I will not be surprised if the CBOE will actually change the margin requirements for oil. Usually when you have a lot of volatility into a certain asset, you usually get a bump up in margin requirements. So just a heads up, futures traders, oil might be a little difficult one to touch right now. Gold futures up 1%. Again, risk off sentiment, 1862. Silver futures are up 0.72%. Copper futures this morning, 0.69%, $3.65. Going to Forex land, 105.46, down 36 pips for the euro dollar. Dollar yen is down 29 pips, 148.99. Pound dollar, 39 pips to the downside, 121.91. Now 96, excuse me. 27.515. Bitcoin is down. Again, that still fits that risk off sentiment. Risk off meaning people are going to start bidding up safer assets. That's usually your Swiss franc, the US dollar, the Japanese yen, gold, sometimes commodities like we see with crude oil, just depends, and usually bonds. And we pivot that to government bond futures. Where are we this morning? We're up 0.75%. So starting to see bonds go higher, at least on the future side. We know we're not going to have a 10-year bid because the bond markets are closed today, but the future side, at least for bond prices, are going up, meaning interest rates are going to pull back if these levels hold. So we do kind of have a light at the end of the tunnel there. 1585 on Ethereum, that's down 4%. Again, still with the risk off sentiment this morning. Let's go ahead and take a look at S&P 500 futures. We talked about gaps to fill. This one has one as well. There's a gap to fill here at 43.39. The key level of support for me, and again, we're off the lows of overnight, is right around 43.09. That's your 38.2 Fibonacci level. That's still holding that trend line that we talked about since October, and it's still above the 200-day MA. So would I go long here? No. Would I close anything here? No. I want to pivot that to what happens post geopolitical tensions or any kind of geopolitical events. It says stocks usually take geopolitical events in stride. Let's go over the ones here. Pearl Harbor attack starts World War II. North Korea invades South Korea. Korean War. Hungarian uprising. The Suez crisis. Cuban Missile Crisis. Kennedy assassination. Gulf of Tonkin incident. That's the Vietnam War. 6-Day War. That's Israel. Tet Offensive. That's Vietnam. Munich Olympics. That was Israel as well. And Germany. Israelis. Yom Kippur War. Israel. The Reagan assassination attempt, Iraq's invasion of Kuwait, U.S. terror attacks, 9/11, Madrid bombing, London subway bombing, Boston Marathon bombing, bombing of Syria, North Korea missile crisis, Saudi Aramco drone strike, the Iranian general killed in the airstrike, and then of course COVID-19 being the largest of all in terms of S&P drawdown. So you can see in the one day that we have those events, the average fall we get in the S&P that day is 1.1% to the downside. And this is throughout history since the 40s. So again, this will not be the last event or a war kind of event while you're watching the stock market. It's not going to be the first one. It wasn't the first one. It's definitely not going to be the last one. COVID-19, as you know, being the most recent one, that started January 20th, 2020, and we had the total drawdown of 33%. And even on that day, when we started locking stuff down, if you guys remember that in 2020, that first day of COVID beginning was down 0.3%. And it takes about 22 days for a bottom to hit and about 49 days to recover. So that's kind of just keeping the context. I know there's so many headlines out there, so many things to read out there, a lot of things that can get people afraid, but we've seen time and time again stocks being resilient over time. So is it a time to buy here? No, and the reason I say that is because we have CPI number, that's the inflation reading, on Thursday. And we also have a producer price index on Wednesday. If we can beat, at least, if inflation at least can show continuous decline, let's see if oil affects it, but we'll get the core CPI number. If that CPI number is good, and we're above the 200-day on S&P, guys, that's stuff you see at the bottom. Remember, we just want to get through the 16th of October. Think about that. That's when we had the last drop in October of 2022, excuse me. So all we need to do is kind of outlast the month of October in terms of seasonality. We talked about that dip mid-October. Really, all I want to do is if we can just hold the 200-day, which is 42.34 S&P, and we can get towards the tail end of October, kind of with our fingernails intact in a sense, I think we're going to be fine. I think we'll get that upside move in November. Guys, we have earnings coming as well starting Friday, so a lot of moving pieces. In my opinion, a bottom is coming. I just need to see that inflation number. If it breaks below 42.35, then it's a whole different conversation. But if seasonality holds up, if technical patterns hold up, we are looking at a pretty good buying opportunity for upside. Just saying. We'll go over that together, guys. No worries. Let's answer a quick question. Good morning, Carlos. If you could only pick one stock to invest in the next 5 years, what stock would you pick? That's a great question. Ooh, gun to my head. The one I always have the heart for is Apple, my largest holding. But I really believe in AI and ChatGPT. I think that's definitely the future. I'm going to say Microsoft. They have a great CEO. They have a great balance sheet, AAA bond rating, AAA bond rating for their credit. They're pretty much a fortress, in my opinion. Microsoft, as we know, has acquired Activision Blizzard. We'll see how that goes. But if that's one stock that I definitely see over time being at least, if not great, but at least stable. Yes, price action has moved here and there, but as we know, but Microsoft is definitely a bedrock company for me, and I love them. I absolutely love them. Though out of the the top 5 tech names out there, I would say that Microsoft is right there with Apple, just because of the fact that Apple makes products that everyone uses. Not everyone uses Microsoft either. I think Apple has more of a reach with the consumer, but Microsoft really getting into the artificial intelligence side with ChatGPT. I love ChatGPT. I use it all the time. I kind of use it more than Google search now when I want to just kind of ask just random questions, which is actually pretty fun. If you don't have the app, I think it's pretty neat. Check it out. Let's go ahead and take a look at the hourly again. We do have that gap to fill. Let's see if we hold 43.09 on the S&P 500 futures. We'll go to NASDAQ futures next. And we're above 15,000. You could see that we had that massive short squeeze on Friday during the middle of the day. Remember put call ratios being 1.5 versus 1, or 1.5 on put call ratios. Those are extreme fear highs. You get those kind of short squeezes on a Friday. Just didn't expect it to be on a hot non-farm payroll print. If you guys remember, we were red on Friday and then we soared. And that's when Google reversed on me and soared. Well, that's what happens. The good news here on NASDAQ futures is that, again, we're above 15K. Again, we're going to see if we get that gap fill to 15,106. And then once we get there, that's when really the the foot meets the road. Let's just say, because 43.68 would confirm the breakout. 15.2 would confirm the breakout on NASDAQ. The question is really, does the dollar fall below 106? That's really it. We're at 106.37. If we want higher stock prices, we need that dollar to go down. It cannot stay elevated. Remember, the price of the stock are priced in dollars. So again, if the dollar is priced stronger and keeps going up in value, the value of the stock in terms of relative terms of a ratio would go down. Simple math. Doesn't go 1 for 1 because the dollar index is against other currencies. But so far, I mean, being elevated, we need to see if the dollar can break below 106. Good morning. Good morning, Scotty. If Scott is here just to make fun of my Cowboys, I ain't hearing it, because University of Miami fan, your team didn't do well either. They could have knelt the ball, Scotty. Don't give me that. I've known Scott for years. Good. He's a great guy, great guy. Watch out for his son, maybe an NBA star in the future. I wonder what college he's going to go to. But with that being said, guys, really what I want to reiterate here is that, yes, we had some headlines over the weekend. Fear out there, absolutely. But nothing has really changed. In terms of the stock market, nothing has changed since Friday. We have a hot labor market, as we know. That is inflationary. Does the inflation number that come in on Wednesday and Tuesday come in hotter than expected? Does that make the Fed not raise? Does the Fed pause? Do they do another 25? That's what we're fighting for every day. We're pretty much against the house, the Fed, the money printer, for their next move. That's where stocks are moving at this moment. We're beholden to the Fed. And it's a poker game. We got to see if we catch their bluff. Yeah, that's Scott. Scotty for you. He knows. What a tough game. All right, guys, we'll go and leave it there. If you guys have any questions, make sure to hit us up on the Discord channel. If you guys want access, comment on the description below. There's our website. Click on that. Click on free plan. Would love to have you guys on board. Let's make it a great week, and I will see you on the Discord. And if not, I will see you tomorrow morning for the morning note. No, I don't like the ticker AI. I was charting that the other day, and I don't like the price action. I think Microsoft's your better bet. Bitcoin thoughts? I still am buy and hold. And again, it has been just quiet in terms of volatility in Bitcoin and crypto in general. In order for Bitcoin to move, we need risk on, meaning the dollar coming down. And again, we talked about with stocks. If you want Bitcoin to go higher, you need the dollar to come down a bit. So again, the value of Bitcoin will go higher relative to the dollar. Do we get that? If the Fed pauses, that's what we would get. We would get a weaker dollar and we would get lower interest rates, which helps everyone, because if lower interest rates are available, then investors will not be as conditioned to want to chase higher yields. They would want to condition to be chasing better returns, capital return. Since Bitcoin does not pay a dividend, it's not a company, you're really just investing for the flip, for the quick flip, right? The capital appreciation. So again, if you're someone that's chasing interest rates, dividends, you're someone like you're owning a home and you're renting it out for the cash flow. And if you're a home flipper, you're the trader. You're looking for capital appreciation. Get in, get out, make my money, and move on. That's what it is. Trading versus investing. Always fun. Have a great rest of your day, guys. We'll see you tomorrow. Cheers.